Simeon, great to have you back on the show. You sticking with that price target and that rating, given what we heard from management last night?
Hey, good to be here. So we actually lowered the price target. I think what you're bringing up makes a lot of sense. I would say the outperform is thinking about the Nike brand in the long term, but we should talk about what happened. I mean, shares deserve to be down here. I mean, it would be intellectually dishonest to say otherwise. And I think right now we're watching the Nike machine look like another retailer. They're over inventory, they're chasing promotions, and that's worth talking about.
Yeah, and of course, margins are back in focus, which we've been talking about really all year, where any of the apparel makers or retailers are concerned. Your expectation that this is a read-through to other names as we get earnings season in full swing?
It's high, and I think what's interesting is normally Nike's the leader. It actually looks like Nike might be following. I mean, Morgan, you and I think last year talked about this work that my team did about DTC not being everything everyone believed it to be. And we're just seeing that manifest. I mean, I think right now we have to ask questions about the strategy, because every time the company pushes direct, we see an increase in direct dollars and we see, to your point, a drop in margins. That's what they believe is not supposed to happen, but that mathematically is what is happening. Wholesale is good. And I think there are large companies, it's not just Nike, but a lot of companies are saying, let's go direct. A year ago, this was wildly contrarian for me to argue against that. Now, I think increasingly we're seeing more evidence that's there. I think we have to ask the question, Nike historically is this powerful brand, tells a great story, understands its inventory. The more they go direct, the more they sound like a tech story of chasing growth for growth's sake. And I think that's where we have to wonder, and your question about the read-through for others, I think we want to make sure others don't. A lot of companies earned a lot of brand equity. Discounts went down, don't give them back.
So then just to parse through it a little bit further, how much of this is a Nike company-specific story versus Nike being impacted by all of these macro trends that we've been talking about day in and day out?
It's a great question. The answer is probably a little bit of it all. I think every company in retail has a little bit of Peloton in them. I think everyone saw an immediate pause when the pandemic hit. Then they saw a surge forward, and then they said that surge is going to last forever, so they built their inventories accordingly. And then things slowed down. And so the question becomes from there, what do you do with that? If you have too much inventory, normally the course is just cut it, move it along and get new product. But that's when you miss by 5%, not when inventories are up 50. And so the collective retail environment is seeing this huge 50% inventory influx. Part of it's because of supply chain, part of it's because of just buying too much. And I think these companies have to decide, is this a different time? Can they say, you know what, it's okay to sell less and charge more and make more money? Nike put up a big revenue beat last quarter or last night, and look what the stock is doing, because they had to give it away in margin. I think it's this awakening. I think we're trained to think it's all about revenues, but what we are seeing is the market is actually allowing you to focus on profits or forcing you to focus on profits. So I think this is a Nike story, but I think it's true of all of retail, and it's deciding, do I need to give away my product at no margin because I have too much of it, or do I sit on it if my balance sheet allows and say, you know what, the customer's going to come back next year. The problem is they bought a lot of sneakers last year. And we think about things, we're trained to think about things in 12-month increments, but what if people bought 18 months worth of sneakers last year? What if they bought 18 months worth of scented candles last year? There's just a lot of things where the customer didn't shop in normal tendency, and companies that appreciate that, I think, can sit on some of this inventory, bring it back out next year when the replenishment is back. The companies that are rushing to pull the trigger, all that brand erosion.